Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, the Bless Y'all, with another video here on Blessed and with Best. And today we are here to talk about how to hit the like button. That's the first thing we need to do. Make sure you spam the like button on this video. Before you get into any video, make sure you hit the like button. But seriously, today we are here to talk about candlestick patterns. Candlesticks are the main way of trading. If you're looking at any stock, cryptocurrency, options, etc., you're going to be looking at some type of candlestick chart. Some brokers have lines where they draw the lines just to get you an idea of what's going on, but candlesticks are the best way of seeing what happened with the market, how the price is moving, because it gives a lot more detail than just a generic line. So in this video, we're going to explain how to read them, and we're going to understand the different patterns that you can pick up so you can identify when to get in, when to get out, and what is the market telling you. So let's get into it. So I did a previous video on this, but I think it was important just to go over quickly how to read a candlestick. But if you want to get more detail, I did a video specifically to that. Make sure you click the icon up top. But this is how you read candlesticks. The green is going to represent a bullish or a price that's moving upwards. The red is going to represent bearish or a price that's moving down. And to read this candlestick, you're going to be looking at the this candle here. It's going to identify a specific time frame, and when the specific time frame happens, so let's say this represents a 1 minute candle. In 1 minute, the price opened here, it went down to the low here, went up to the high here, but at the end of that minute, it closed here. And the same thing in reverse for the red candle. It started out open here. In this time frame, it went to a high of here, went to a low of here, but at the end, it closed. Pretty simple, not too difficult to understand. But if you need more information on it, I did do a video. Click the button up top for that video. So in these candles, there's going to be different strengths of candles. So as you see right here, we have this green candle that is completely green. There's no wicks included. That just shows that it's a very strong candle. So within this time frame, it went all the way from here to here. There was no selling pressure. Sellers didn't really come in. Sellers didn't want to get into this at all. This one is also very aggressive. It tells a story. And that's what these candles do. You have to look at and see, what are the buyers and sellers telling me? So in a candle like this neutral, that means buyers came up, sellers came up, and it's almost like a tug of war. At the end of the candle, the buyers did win, but overall, this is a tug of war battle, and it's pretty neutral, and both buyers and sellers are trying to get into this thing. This one right here is going to be the least bullish. This shows that buyers started, they pushed the price all the way up because they got all the way up to this candle, but for some reason, sellers pushed it all the way down. And that may be a bad sign. So you need to figure out how to read these candles, because looking at each one, they all tell a story. If this one goes from here to here and it's just green, that means it's very strong. If this goes from here to here and comes back down, that means it's very weak. That means sellers have started to get a hold of it. And that's what we want to do with identifying these patterns and identifying when we look at candles together, how they work. So let's get into this next one. So these are the main patterns we're going to be looking for on reversal patterns. This side right here is going to be the bullish patterns. This means the stock is strong and it's green and it's heading upwards. These reversal patterns right here means it's going to be headed downwards. And the same way I explained in the last slide, if you look at these patterns here, look how this is a hammer. This is called a hammer. This means it's bullish because look how the price went. It went all the way down to this low here, and then it pushed all the way back up. That means sellers were trying to push this down and they got rejected. And buyers said, no, we don't want to go any lower. We're going to push this back up. So that would be a good sign for somebody that is looking to go long or looking to purchase this stock, because if sellers pushed it down and buyers rejected that price and said, no, we don't want to sell it that low, that means there's some type of support there. There's some type of buyer there that is saying, no, I want to buy this thing. It is a potentially good deal. And for us, that's what we're looking for. We're looking for the buyers and sellers to create an imbalance there. We're waiting for buyers and sellers to tell us, give us a signal of when to get in. And this is a perfect signal because it's saying to us, sellers try to push this thing down, but buyers rejected it. These are also pretty much the same. These are different style of candles, but it's telling the same story. So this one, sellers pushed it down, but buyers ended up rejecting it and pushing it even higher than it was before. So if sellers are pushing it all the way down, let's say it's going all the way down to $20, it dropped to $20, and then buyers immediately said, no, this is a great deal, I want to buy this at $20, and they even pushed it past $20 and went to all the way to $21, that's a good sign that this thing is going to reverse and head it in an upward direction. And these same patterns happen here as well. This is basically similar as well. Pushed it down and then it pushed back up. Same with this tweezer bottom, pushed it down, pushed it back up. This one is a little bit different. It's also a bullish signal as well, but you're usually going to see these at like the bottom of the market where it gets pushed down. Sellers pushed it down, but they rejected it and buyers started coming back. You're usually going to see these in a group. You're not going to see these alone. Usually you're going to see some type of red candle before this one, and then you're going to see the inverted hammer, and then you're going to see a green candle. But this one, they just have it by itself. But usually you're going to see these in a group. So just be aware that this is also a bullish sign as well. But just think about it. So if sellers are hitting a level and they push it all the way down, and then buyers say no, they say no, we're rejecting it, and push it back up, that's a bullish signal, and that's what we want to see. The same thing can also happen in reverse. These same patterns are going to happen in the reverse way. So you have your hangman instead of your hammer. You have your shooting star instead of your inverted candle. You have your bearish engulfing instead of a bullish engulfing, etc. And they're just going to happen in reverse. So if a bearish engulfing occurs and buyers are pushing this up, 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 and then all of a sudden sellers aggressively reject that price, it aggressively sells off. That means no, buyers don't want to buy here, sellers are taking control, and odds are this price is going to begin to come down. And we're going to take a look at these different patterns. I have a couple of examples for y'all of patterns, where to look for these, and what they look like in a real market. Because just looking at these with these examples, it gives you an idea of what's going on, but it's better to see it against a real chart. So we're going to see that in a little bit. But next is the continuation patterns. So continuation patterns are good signs if you're already in the market or you want to buy the market as it's continuing. So let's say you are in this particular market. This is one of my personal favorites, the bullish mat holding, where the price pushes up and then it cools down a little bit and then it pushes up again. Because in the markets, they don't immediately just shoot up. They move in waves. So if the market is generally going up, it's in an upward direction, it's going to go up, 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 and then it's going to pause for a little bit, maybe come down a couple of points, nothing too major, very similar to how this is. It shot up very strong, and then it pulled back a little bit, and then it shoots up again. It's called a breathing pattern in the market, where just the direction is still going on, the trend is still moving, but it just pulls back slightly, takes a breather, buyers are getting a little tired, but then we introduce some more buyers, and then it keeps on going upward. All these are basically the same. You're going to see these pretty much in the same way, where buyers get really aggressive, they push it up, and then sellers push it down a little bit, and then buyers continue to push it up again. You're going to see these in a similar way. These are kind of similar, pretty much the same thing in a sense, just different styles of showing it. And the same thing happens in reverse, where the market is going to continue to move in waves, even if it's moving down. So let's say it came down and aggressively shot down, and then people started buying it back a little bit. Maybe sellers were covering their position, and it pushed it up a little bit. time to calm down. It relaxed a little bit, and then it continued on in this pattern. So that's what you want to see if you're in this trade, or you want to start to take a position or add to your position, are continuation patterns like this, where it's just taking a breather, and then you can get in, and it's going to continue in that direction. So the keys to, let's go to this one real quick. So with this one, candles cannot be your only signal. And what I mean by that is you can't have just this continuation. You can't just have this reversal pattern where you have the hammer and you say, okay, I see the hammer, I want to buy this thing. No, you can't just immediately buy the hammer and say this is going to work out just fine. And you need to have these signals connected to a trend line, a level 2, maybe some news, maybe like a moving average or something like that. Some type of other trend, other indicator to prove to you that this trend is going in this direction. So for example, if you see a bullish chart and you think it's going to be a good buying opportunity, and then you see your candlestick and you say, okay, this is a hammer candle. I know from the charts I was looking at, when you see a hammer, that means buyers are buying the stock. They're excited to buy this. You want to wait for other signals to pop up as well. And usually you're going to have those other signals. So it may be you see a hammer plus you have a trend line there. That's going to make the odds of your trade working out a lot higher, because a lot of people are looking at that, and mixing multiple indicators along with your candles is going to increase the probability of this trade actually working out. So don't just rely solely on the candles. Use other indicators as well. Marry the two together and say, okay, I have a candlestick, I have a trend line, and I also have a moving average that is in my bullish or upward direction, and I'm going to take the trade based off of those three things there. And that's the best way to succeed in this market, have the best odds of winning your particular trade, is to have multiple signals showing you that you're going in the right direction. So without further ado, we're going to get into a couple examples, because I want to look at a few charts, because I feel like it would be much better to see this real. Okay, so let's get into it. Okay, so today we're going to look at 3 different charts. I have 3 different charts available here. And this first one, I just want to explain what I mean by having multiple signals in place. So looking at this chart, we can see that the support and resistance are coming into play there. So we have this key level right here, this key trend line. We have this key trend line. We have another trend line right here. We have another one right here. We have this high a day level. We have this minor level right here. And these are just key levels that we're identifying. We say, okay, this is where the market's bouncing. This is where it's moving. So let's say we understand we have these key levels. And if you're not familiar with how to draw these support and resistance levels, go check out my support and resistance video. I made a video on that. But as we have these key levels here, we want to wait for multiple indicators to come up. And one of them can be our candlestick patterns that we were looking for. So with this one in particular, let's look at our trend lines. So let's zoom in. Boom. So we have our trend line. We have an area, a zone that we want to get into this play. And voila, and the market is closed now. Voila, look at this. We have one of the indicators, one of the candlestick patterns we were looking for before. This is our bullish engulfing candle. Let's make that. This is our bearish engulfing candlestick pattern right here, where the two are boom, boom. The green is here, the red is here. It engulfs the green candle, and then that is a signal that the market is heading downward. And we also can marry that with our trend line right here, where it says this is about as high as it goes. So we can say we have our bearish engulfing, and we have our trend line, and this gives us enough conviction to make this trade and trade it downward. Same thing happened here. We have a bullish engulfing candle, and we also have our inverted example of our inverted as well, inverted hammer. So we have these two right here, our bullish engulfing, where it engulfed this red candle here, and that is a signal to go long. It is also on the trend line right here, and that shows us that this is the lowest this market generally goes, and that is our signal to get long here. So we get long based off of the trend line and based off of this candlestick pattern, and we go long. So that is how you want to marry the two. You want to use them both in unison. You can also use this is a moving average. You could do the same thing with a moving average, maybe with our continuation patterns as well. I do have another example of a continuation pattern, but there's a lot of these. There's a lot of little continuation patterns here. How this is moving upwards. We have our 1, 2, 3. This is the pop we were looking for before in our continuation pattern. Pop, and then 1, 2, 3 comes down, and then it keeps going. So make sure you are using not just the candlesticks. You want to use multiple indicators to identify what direction this market is going and how to trade it based on what it's showing you. So let's look at another chart here. I'm gonna look at PayPal real quick. Zoom out. I already highlighted one of them, but this is an example of our continuation pattern. How it's trending down. We have our red candles, and then it pushes back a little bit. The market takes a little breather, as it tends to do. That's what happens in these markets. It doesn't just go straight up or straight down. It pulls back a little bit, and we're able to take advantage of this VWAP, also this moving average right here. So we have 3 signals telling us this is a great opportunity to sell this thing. And then if we continue down, it does exactly that. It continues down and sells off right there. So that's a perfect example of our continuation pattern candlestick, along with our moving average and our VWAP showing us the signal as well. So that's what you want to do. Look at your candlestick patterns. Look at your other indicators and marry them together to make valid trade signals. We also have this right here where we have our support and resistance, our trend lines. Boom. And it's showing us again, we have our couple bullish engulfings, we have hammers, we have all type of different candlestick patterns that we were looking at before that are showing us this is bearish right here. This is bullish right here. Look how strong that candle is. It completely rejected that level and then popped right back up. That's our morning star right there. So that's exactly what you want to do. It's pretty simple. Once you get the hang of it, once you get familiar with the different patterns, how they work, and then you want to look at the other indicators together to identify that. And this is the last chart I want y'all to look at. Another bullish engulfing where, bearish engulfing, where it reversed, boom, pulled back and reversed, and then it headed downward. Another continuation pattern right here where it was heading down and then it pushed up a little bit, took a breather, and then boom, continued to head back down. So these are the patterns you want to look for. I really recommend the best ones. I'd say my personal favorites are the bullish mat hold. You're going to see that one a lot. You're going to see the bearish mat hold as well. You're going to see that one often. You're going to see a lot of hammers. Hammers are going to be pretty common. The hanging man, the shooting stars, these 4 right here are going to be very common. And you're also going to see a handful of the bullish and bearish engulfing candles. You're going to see them all. Just become familiar with them. And then you're going to start to see them as you're continuing to look at charts. But marry the 2 indicators, 2 or 3 indicators together. Look at charts, look at the chart patterns, and you're really going to get good at this once you get familiar with how these candles work. But overall, it's just about understanding the strength of these candles, who's winning the battle, who's more bullish, who's more bearish, and who is directing the market. Just figuring that out, and you'll be able to understand how candlesticks work. But if you have any questions, let me know down in the comment section down below. And that's going to wrap it up. It's been your boy, Blessed Applesauce. Stay blessed, and I'm going to see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.